Good evening, everybody. Let's go ahead and get started. Want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic evening so far. Hopefully your day's been great. Obviously, it's been a fun day. We had such a great win this morning with the overnight trade. What a great day that was. Probably the best trade we took with the overnight strategy um, since probably I think April, no, May 12th or something like that. Yeah, it was really good win. So no, it was April 12th. Yeah, that was the last like win that was like multi thousand dollar win. So that was really fun. Yeah, I cleared almost 5K on just my 100K account, one of my 100K accounts today, and I had a couple of 200K prop from accounts that ended up making closer to 10,000. So yeah, just a great day. Obviously, I had to give a lot of that back to the sequence loss, but about half of that stayed as a net gain. So that was really fun this morning to wake up to. Obviously, very inviting to see that. Very welcomed, very welcomed to see that win today. And then a lot of our other trades are doing well. Got our last I checked. Let me see how they're doing right now. I got my other account pulled up. Yeah, okay, that's the best I've seen them this week too. Weekly trades from Steve Scanner are also cooking nicely. So looks like it's going to be a good week. Excited to close those trades out tomorrow. And then we've also got the Divergence scanner. This is what I want to talk about tonight. We talked about this last week. Last week we talked about the update that we made to the Divergence scanner. So far, super pleased with the update. So tonight, what I'd like to do is I want to go over the update that was made in a little bit more detail. I'm even happy to show you guys a little bit on like how it works and stuff like that. We may even go back into the back end spreadsheet. I'll show you guys some things that are pretty cool with it. Um, but yeah, it's super awesome. So I'm excited to discuss that today. I'll talk about some of the top signals that we still have on the Divergent scanner, and I want to show you guys today. Like I'm actually going to show you one of my live accounts. I don't typically do this, so I'm going to show you guys. I have my account pulled up where I take my Divergent signals, and I'll show you guys how I scale into positions using the Divergent scanner. I think we have something very special here. I know a few of you, there's a handful of you guys that have expressed to me that, that you use the Divergent scanner for most everything you do now. This may be the most underrated tool that we have. I'm hoping to find ways to turn this into a more, how do I put it, like set it and forget it strategy, because it's amazing. So if you're listening right now, whether that's live or on the recording on the site, or if you're watching this on YouTube, if you're looking for a tool that will tell you which direction the market's going as a swing trade, like over the course of 1 to 3 weeks, I can't think of a better tool than the Divergent scanner. It is absolutely bar none the best. And I know I'm biased, but I'm saying it out loud because I've been trading for 13 years. Nothing comes close to what this does as far as picking the direction over the course of 1 to 3 weeks, 1 to 2 weeks or so. So I'm really excited to jump into that today. Before we get started, as always, though, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade. In addition, how big your contract size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, so let's dive right into the update and why this thing is so powerful. I want to make sure, because I know a lot of people maybe watching this on YouTube or other places might look at this and be like, I'm just going to skip away. This isn't very interesting. Well, let me show you how powerful this thing is. So for those that don't know what COT data is, let's actually just do a quick little um, rundown on what COT report data is, because this is going to change your life. Like from a trading aspect, COT report data is amazing. And it's amazing that we even have access to it. So, for those that don't know what COT report data, it stands for Commitment of Traders. It tells us what the banks are buying and selling each week. You can actually get it for free if you go to CFTC.gov. And if you go to their homepage right here, so CFTC.gov, and right in this ribbon up here, if you click on Commitment of Traders or COT report, these are all the different COT reports that the CFTC releases once a week. This is a U.S. government financial regulatory authority. What they do is they regulate the futures and Forex market. And one of the things that they do each week is they release a report, and it's called the COT report. It tells us what the banks here in the United States have been buying and selling on any particular week. Okay. So there's a bunch of different COT reports. The one that we use is the CME, so Chicago Mercantile Exchange short format report. This is the most common one that people use. And they aggregate the data into two different categories. You have non-commercial data and commercial data. Okay. And let me show you what a COT report looks like specifically for something very common to trade. Let's just do like the euro. So if I search the euro here, I can pull up Euro FX futures. These are the euro contracts as of May 20th, 2025. Okay. And this comes out every week. And you can see I've got the non-commercial side and commercial side. Right here, you've got the long positions and I've got the short positions right here for non-commercial data. Right here are the number of contracts long for commercial, and right here I have the number of contracts short. Long story short, to keep this super simple and easy for people to understand, and I want to make sure everybody gets this, and I'm going to show you how you make money with this. But the non-commercial side is the side that people ought to be using. Like if you're a trader and you're trying to make money as a trader and a speculator in the market, the non-commercial is what you want to follow. Basically, non-commercial is the side of the market that these are what we call, if another nickname for this is large speculators. So why do we want to follow large speculators? So large specs are non-commercial, and we want to follow them because these are the guys that trade for a living in the big institutions. So when you think of like, I don't know, think of the biggest institutions you know of, like JP Morgan Chase, Bank of America. You know, you got TD Ameritrade. You've got let's see, I'm Goldman Sachs. That's there you go. And what's the other one? BlackRock. When you think of those big guys, right? So when you think of those big guys out there trading, they're classified as non-commercial. I'll explain what commercial is in just a second, but non-commercial are the large specs. Okay. Commercial, for those, because I see a comment there from Anthony about the difference between commercial and non-commercial. Commercial is basically, let me give you an example of commercial. A commercial trader is, let's say you're a farmer in the Midwest and you own a massive company and you own tons of farms and you grow corn or something like that. Okay. And let's say that you want to hedge against your crop. Okay. So you would put in a position against corn in the futures market to hedge against your crops. And that way you can kind of keep your business afloat um, as um, as things go along, right? So you can use it to keep your business operating and keep things running smoothly in case you have a bad season with your crops or something like that. Or let's say that just everybody has a bad season, you can kind of hedge that. If you're expecting a really good season, but maybe something might go wrong, you can hedge against that by putting a short position on, corn futures, right? Another example of this would be like, let's say you deal with foreign currency and you're like a big Walmart or Target or something like that, Costco, and you got buildings and stores all over the world, and you've got currency that you operate in Mexico or something like that. And you've got Costco's down there, and you want to hedge against the currency that's down in Mexico. There's departments at these companies that will not speculate. They're, like if you work for the foreign exchange department at Costco, you're not hedging you're not taking trades to make money for Costco. You're just rather trying to hedge the market so that you can operate your business correctly. So those are some examples of what a commercial trader is. So a commercial trader uses it to operate their business, but it's not to speculate or to make money. And so often you'll see the commercial traders in the opposite direction as the non-commercial. Non-commercial is taking an outright position in order to make money. Okay, so hopefully this makes sense to some degree. That's all you need to know. So forget these guys. Focus on this over here. It's very important that you focus on this. There is some use to the commercial data, but I don't use it much anymore. I used to use it a couple of years ago. I'm sure some people on YouTube will want to ask me that question because I did use it a couple of years ago on some videos. But now it's just all non-commercial, and our scanner's built off of non-commercial as it should. Okay, so what we do, this is the main thing that you need to know. So these speculators build out positions over several weeks, sometimes over several months at a time. That's how they speculate. You don't want to follow COT report data on a week to week basis, in my opinion, because you can get caught going the wrong direction that particular week. I'm more interested in, where they want to go. I actually had a really cool conversation this week with ChatGPT about non-commercial COT report data, and I asked it questions without trying to influence the AI, because you can do that. I don't know if you know you could do that, right? But you can influence your AI, so you got to be careful. So I tried to ask it very objective like questions about how it would use COT report data and try to figure out what the best method of it is. And yeah, what we're doing is perfect. So what you want to do is you want to follow what the banks are doing over the course of several weeks. So that's why when you look at our scanner, the price divergence scanner, we follow what's called the 3-week shift. Okay, that's right here. The 3-week shift is a percentage change in COT data over 3 weeks. Okay, because again, banks can change the direction on a week to week basis. But if they change the direction over the course of 3 weeks, that's a lot more significant because you might catch the banks buying one currency pair this week, but over the course of 3 weeks, they're actually selling it overall. So you want to be a little careful not to just dive in and be like, I'm going to go all in on the buys because they're buying this week. But what if they're overall selling over the course of 3 weeks, right? So we want to get a bigger picture of what they're trying to do. Another thing to remember, because this is something that retail traders like us don't realize, but banks, they really do take time to get into positions. Like for us, all you have to do when you want to take a trade is you just hit the buy button and you're in. You hit the sell button and you're in. But the banks can't do that. The banks own everything, right? And so when they try to build a position, they're kind of trying to pull positions away from another institution and kind of add down here and sell up here and buy more down here, right? Like they're trying to move things around. That's why a lot of retail traders think the banks are after their stop losses. And maybe that could be partially true, but in reality, what they're trying to do is just invoke liquidity no matter where it comes from, whether it's your trade or from somebody else's big time trade. They're just trying to invoke liquidity so they can get into a position. That's why often banks will take big positions surrounding news events or after news events are over, because those news events often provide the liquidity necessary to get into the trade, right? So that's how they take positions. So when we look at this COT data, the 3-week shift is perfect because when they start to express a direction over 3 weeks, that means something. That's not just some kind of like fluky 1 week, 2 week off thing. It's like, hey, no, 3 weeks, that's a pretty good amount of time. So when we look at this on this divergent scanner, we're trying to find currency pairs that have pretty big shifts. So right here, like when you look at the pound CAD, it's got a positive 24.6% shift over the last 3 weeks. You look at the USD CAD and it's got a positive 24.58% shift over the last 3 weeks and so on. And if you look at the negative shifts, I got the CAD franc with a minus 25.98% shift. So what this means specifically on this example is it means that the banks over the course of 3 weeks have sold off their positions to the tune of 26%, almost 26%. So 3 weeks ago, they had more long positions, and today they have less long positions. And it's a combination of fewer long positions and subsequent acquisition of shorts. So they're adding more sells. And unfortunately, this scanner doesn't distinguish, how much were buys that were let go of versus how much were acquisition of shorts. It's just an aggregate. And so far I've been really happy with just looking at the aggregate total, like the difference between the buys and the sells together as represented as a percentage. That's been working really, really well. Okay. So what we do with the so what I do with the COT data is when it comes out every weekend is I in my scanner or in the back end of the scanner rather, I take this data and I plug it in and the scanner tabulates new percentages. Okay. And when that, once it's plugged in, it goes in here and it tells you on the website, it's like, okay, yeah, that's what the bank's bought and sold this week. Now, we took this a step further, didn't we? So this is the most recent tool that we built. You know, we built this scanner back in August or September of last year, and I think it's been kind of just like been on the sidelines. Like we've not really pushed it a lot. Now we've been taking more price action signals off of the scanner, which has been awesome. But I really want to see if we can find ways to level up the use of this scanner. I'm thinking of ways on how I can kind of involve this more in the group, because this thing is amazing. And some of my best trades that I've taken, in fact, the best trades I've ever taken this year so far in 2025 have come right off this scanner. So, and we've made some improvements to it that I think are amazing. And that's kind of what I wanted to talk about tonight. But before I do that, for those that are watching this who are brand new, let me just tell you kind of, so I told you one part of this, which is the shift. Let me tell you about how the rest of this works and why this is so amazing and how it's going to help you take more successful trades. So, in order to understand how it's going to help you take better trades, you need to understand the divergence. Okay, that's the whole essence of the divergence scanner. What does a divergence mean? Well, it means a separation of two things, right? A convergence is a convergence of two things that come together, right? So divergence means that they're separating apart. So that's important. You have one thing going one way and another thing going the opposite way, right? So so what we have here is we have two variables. We have the shift, which I just talked about over the last like 5 or 10 minutes. Over here in this column, this is the change in price over the last 3 weeks. So both of these are two variables that are monitoring two different pieces of data over the last 3 weeks. So it's saying, hey, the CAD franc has had a positive increase in price over the last 3 weeks to the tune of 0.37%. On the next column, you've got the subsequent shift in COT data from these large speculative banks in the United States specifically, right? And you can see the banks have sold 26% of their positions over the course of 3 weeks. Okay. And what we want to do is we want to figure out if the banks are making money on this trade or if they're losing money. Because if they're losing money, here's the little secret.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members of my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
They don't want to lose, right? Well, that's easy to understand, right? They don't want to lose. These banks are really good at winning. In fact, most of the time they are winning, and you'll see that here in just a second. But when they're losing money, uh, they have this unique way of getting their money back. How do banks get their money back on a losing trade? And the answer is simple. You just buy more of the position and you bring it back up to where you originally got in so that you can close out the trade at either break even or take the trade even higher from where you wanted it to go. Okay. That's it's the same thing with you and me. If you get into a trade that's losing and you want to not lose on the trade, if the market by some reason goes back to your original entry, you can close out at break even or perhaps still make money on that trade. This has happened to me multiple times. Like I've had investments in the past that I've bought. They go down on me for a few weeks and then, give it a couple of months and those things are popping in your favor, right? This is very common. This is very common, right? And so the banks work the same way. They're not excluded from the price of the market. They have the same rules as you and I have that way. But what's unique about them is they can get their money back and they're really good at getting their money back on these trades. I'll show you a bunch of examples tonight on how they do that. So what this scanner does is it does one thing in particular. It senses that divergence. If the scanner can get a sense of the market not going in the direction that the banks want to go, then there's a really good chance that currency pair is undervalued and that the market will in fact go in that direction. Let me give you some examples of this. Here's the Euro CAD. The Euro CAD is down 0.49% over the last 3 weeks. Meanwhile, over the last 3 weeks, the banks have increased their positions by 24% on that currency pair. That's a divergence because you've got the market slightly going down. Meanwhile, the banks are buying this currency pair. And so our scanner, what it does is it recognizes that divergence in those two variables, and it ultimately is going to create a ranking. And the ranking maybe is not a good name for this, but it's basically it's going to spit out a number, and the number basically just tells you if it's a positive number or negative number, it means that the market's more likely to go up if it's positive, and if it's a negative number, it's more likely to go down. The more positive, the more likely that currency pair is going to receive a move to the upside over the next 7 to 14 days, or sometimes 7 to 21 days, depends on the trade. If you're really early to the trade, it could take maybe 2.5 weeks, tops 3 weeks. But I've had some of these where the market's ready to go and it just takes a couple of days for the trade to just work out. So you do have to fine tune here, 1 second, guys. I got to close my blinds. It's that time of day where it just kind of hits my window just right. So, okay, so that's basically what the ranking does is it tells you how big this divergence is. So, have you ever seen like, okay, here I got two good analogies of this. Let's say you have a rubber band and you stretch out the rubber band, right? What does the rubber band want to do if you let go? It's going to go back to its more natural state, right? It's kind of what's happening here. You've got two variables. One's going this way on one hand, and then the other is going this way. And eventually, those variables are going to have to snap back together. Have you ever taken like an accordion instrument? Have you ever seen somebody use an accordion? Maybe you've used one yourself. You pull that accordion out. It has a max, doesn't it? You can't just keep pulling it out forever. You have to eventually, that accordion has to kind of swing back the other way, right? That's what this is trying to tell you is it's telling the more positive the number, the more likely that market is tuned up and ready to hit a move to the upside. The more negative the number, the more likely that is going to head to the downside soon, right? And then on the last column, we make it a little bit easier to read. So this is just plain English, right? Everybody can read this, right? Strong buy, strong buy, strong buy, buy, neutral. They mean exactly what they say. If it says strong buy right here, that means that this is a currency pair that's ready and will likely have a move to the upside over the next couple of weeks. If it says buy, it's also a likely signal, but it's not as likely as, say, a strong buy. I typically don't pay attention to them, to be honest. Like, I mean, if I'm really looking for trades, I might look at those, but I do have some other options right now, and so I probably wouldn't care. Neutral is neutral. That means you don't really care about neutral. And one thing you'll learn about the divergence scanner is most things will be neutral. Okay, so you're going to have neutral here like all the time. Why would that be? Any guesses? Why would we have so many neutral signals most of the time? And the reason why is because the banks are good at making money. They really are good at making money. And so, because they're good at making money, the market often does not go opposite of what they want to do. The market typically goes in the direction of what they want. So, if the market's going in the direction of where they want to go, you're not going to see um, buys or sell signals come out of this because it's going in the right direction. Let me give you an example. Like right here, here's the franc yen. It's up 1.21% over the last 3 weeks. If you look at the shift, the banks have increased their positions by 7% over the last 3 weeks. So we have a ranking of zero. It's exactly at zero. The signal's neutral, which it should be, right? Why is that? Well, it's because um, that's what we call an efficient market. The market's efficient because the banks are buying over the last 3 weeks, and the market responded to that buying. So that's an efficient market. So pretty much anything below, I think it's like below 9 or 10 is going to be just neutral. Like you shouldn't trade it. There's not enough of a divergence there to make it worth your energy, time, and money. Okay. But anything that gets over 10, you might want to look at. But really, the magic number, I think, is 14. 14, I think in the ranking, either negative 14 or positive 14 pretty much puts you at a strong buy or strong sell. I've seen some of these get as high as I think positive or negative 31. And that was like, I think I had a gold trade last month. I'm pretty sure it was gold. It got up to like a 31, negative 31 in the ranking here before it finally collapsed like a rock. And it's actually still collapsed ever since. Like gold has been on this tear to the downside ever since the 22nd of April. And our scanner got a negative 31 ranking on gold on this 22nd of April, right before gold hit its all-time high. And I think it was as high as like negative 25 or 29 just like a couple days before that, and that's the week where we got the original signal to sell gold. So anyway, kind of cool stuff, right? Really, really cool stuff. All right, so that's what basically that's why you're gonna have so many neutrals in here, and occasionally you'll have some other trades. Right now, if you filter the overall signal, there's 1, 2, 3, 4, 5, 6 different opportunities that are in strong buy territory. And for those that don't know, this scanner has all 28 major Forex pairs, and it has 5 CFDs, including gold, silver, oil, US 30, and NAS 100, for a total of 33 different instruments that you can trade. And of those 33, we've got 6 signals right now that are giving us decent trading opportunities. So what can we conclude here based off of all the information I just shared? Basically, what we can conclude is that the banks are losing money on these 6 currency pairs right now. They're either losing money or they're undervalued based off of how much buying or selling has been put out by those banks. Like for example, let me find you a good one. Like, okay, so here's the pound CAD. So this one's actually positive over the last 3 weeks. So it's positive 0.25%. So the market has gone up, but it's very small amount that the market's gone up. Meanwhile, in that same period of time, the pound CAD received almost 25% increase in long positions by the banks. All right. So you've got a positive number here and a positive number here. So that's not a divergence, right? Well, so that's what we fixed this week with the scanner. Sometimes you actually have currency pairs like this pound CAD as an example, where the market really hasn't gone anywhere. It's just kind of break even. Like it's just at the same spot where it was 3 weeks ago. That's kind of where the pound CAD is, right? A 0.25% increase over 3 weeks is really not that much. It's a very small increase. Meanwhile, the banks, though, they had a pretty good increase, like a 25% increase in position by these U.S. bank speculators. That's a commitment. That's a real commitment on the pound CAD. So before the update I made over the weekend, this probably wouldn't have shown up as a signal. All right, this wouldn't have been a trade opportunity. because we look for true divergences. Okay. But what I've kind of learned over time is that you really got to pay attention to the currency pairs that have these bigger shifts. That's really what matters if you think about it, because it doesn't really matter as much where the price has gone, although that is an important factor. What matters the most is which direction these banks want to go. Do they want to buy or do they want to sell? And how much are they pushing that narrative? Well, right now on the pound CAD, a 25% increase seems to be a pretty strong, that, hey, that's a commitment. If this market goes down, they're losing money. So the market's gone nowhere, really, if you think about it, but these banks they want to buy. And so that's why we're issuing a buy signal right now, not necessarily because the divergence is so big, but it's really just because the market really hasn't responded to that bank buying pressure. So you might ask yourself a question. So why hasn't the market gone up even though the banks have bought so much? So there's a lot of reasons for this, right? The US banks that we gather this information from, which is the CFTC releases this every week, they're not the only participants in the market, right? These US banks are in competition with each other. They're also in competition with the entire world. Like there's banks all over the world. And so there can be reasons why the market hasn't responded necessarily to these US banks, right? So, you know, these US banks who bought positions on the pound CAD, they really haven't made a lot of money yet, but their plan is to get the market there. Their anticipation is that the market's going to go there. So just because the market hasn't gone up yet doesn't mean that the US banks were wrong. It just means that that's their anticipation, that they think the market is going to go there, it just hasn't gone there yet, right? And so from my experience, if you follow what these US banks are doing, especially if you catch it early like this one, the chance of you making money on this trade over the course of 3 weeks is very likely. I couldn't give you an exact percentage, although I am launching, and I know I've promised this for a while. I know I have it. It is done. I just need to launch it. But I do have a MyFX book coming out for 3 different strategies. I mean, I've already launched them, and if you want the specific links, I can send them to you. But I'm going to have them on the site here any moment. So I've got a MyFX book account for the overnight trading strategy full box. I've got a MyFX book that we've been tracking for the weekly trades, and I've got a MyFX book that I've been taking divergent signals off of as well. So since we now have had this since August, I've got enough of a track record that I can publish so people can see that this really does work. Um, a lot of fun. So anyway, I'm excited to show you guys that. Anyway, so 3 different MyFX books that I'm launching, and they'll be available on the website. But they're already available because I already have them up. So if you want the specific links, just send me a message, and I'm happy to send you the MyFX books if you guys want to kind of peruse through the data and the track record and stuff like that. So, okay, cool. So I wanted to cover a few other things here. Okay, yeah, let's see how do I want to go with this. So I just want to finish on this, right? So that's the update that was made, right, over the weekend. Is there's been basically I increased the sensitivity on the 3 week shift so that we're operating and that we're basically giving a lot more value to what the banks are choosing, because before it was like an apples to apples relationship between the 3 week shift and the 3 week change rather, and the 3 week shift in caught data. And the problem with that is you'd have a lot of these currency pairs like the pound CAD, like maybe say the euro CAD, which by the way has been one of the best trades this week. If you go back and look at it, um, like this market really hasn't gone down that much, even though the banks have been buying. But that's a divergence um, because the banks really haven't made money on this trade yet. So just because before what this scanner would do is it would try to just find the ones that the banks were actually losing money on. Now this scanner is it's still looking for that stuff, but it's also looking for stuff that's undervalued relative to how much buying or selling has been done by the banks. That's that's what's happening now. Because I think this week you'd only have maybe, gosh, I mean, you might not even have any strong buys or strong sells right now. I mean, maybe you'd have one on this like CAD yen, Like that's a high rank right there of negative 19. But everything else would probably be like a no go. Maybe NAS 100 potentially would be a pretty good one. NAS 100 is actually a great trade right now for the sell. You can see NAS 100's up 10% over the last 3 weeks, and the 3 week shift is up or down. There's been a change in positions by the banks on NAS 100 by negative 13%. By the way, on these CFDs, they're programmed a little bit differently because CFDs move a lot more than Forex pairs do. So I had to make a manual adjustment. This was a while back on these CFDs so that their rankings are more appropriate based off of their movements because obviously this is a huge movement. Like if you filter this by top movements, obviously, NAS 100 and US 30 are going to be right up there because they're up so much and they move a heck of a lot more than Forex pairs do. But we had to make that adjustment because so anyway, I programmed this so that it makes an adjustment based off of um, yeah, so it doesn't overpower the signal because these things do move a lot more than Forex pairs do. I hope that makes sense. If it doesn't, don't worry about it. Just trust it because I got it all figured out. Okay. I just for those that are kind of geeky and like to look at data and stuff like that, I got it all figured out. So I programmed it so it would work better. Okay, cool. So yeah, anyway, great update because now we've got a bunch of signals in it. And this week I posted these in the Telegram chat. So I on Monday or Sunday I posted these, if you guys remember, right here. So these were the top signals off the Divergence scanner. We had CAD Frank, strong sell, NAS 100, strong sell, USD CAD strong buy, and Euro CAD strong buy. And if you had taken all four of those would be up right now, except maybe NAS 100. You'd be slightly down on NAS 100, but even then, it's starting to come back. If you had taken all of those last night, you'd be up on all of them right now. This is CAD Frank. I actually wanted to show you guys what I've been doing over here. This one actually just continues to drop, which has been nice. This one's got a ways to go, I think. And then another one that's been really good. This one's fantastic. This one had a great move to the upside on the Euro CAD. I wanted to show you guys this because when you look at the Euro CAD, it looks like it's just been in consolidation or that it's not doing much. Over the last 3 weeks, if you look at the last 3 weeks, this one's had an increase in positions by how much? If you go look at the Divergent scanner, the EuroCAD's had a 24% increase, right? And if you look at the last 3 weeks, though, in that same period of time on the chart, 3 weeks ago was like over here, like right over here. And you can see that the market's basically done nothing during that period of time. That's why I'm still in a buy right now because I think this is a great trade. If you actually go back out and here, I'll turn this off. And if you look at the real trend over time, this EuroCAD is actually in the middle of an uptrend right now. This is a long-term uptrend, and the banks have decided to double down their uptrend position right in here. So think about this. On the higher time frame, as you look at the EuroCAD, you're basically forming some kind of pennant or consolidation pattern right through here. You got a pennant pattern kind of growing through on the higher time frame just as you're getting all this buying pressure going on the EuroCAD. So I'm feeling really good about this. Well, I'm feeling good about all of these, but this one in particular I really like because you've got so much buying going on by the banks right now. It really does look like they're just trying to create liquidity throughout here. They're just building liquidity before they basically do something like this or they do something like this. And these types of moves happen pretty quick, guys. Like in particular, let me actually take this one. How far was this move back over here? So from the time that this was consolidating back over here to the time that the market took off, this was a total of 154 bars or 8 days. That's very much in context with the banks, guys. So that's how they trade. They basically build out these positions over the course of a couple of weeks. They wait and wait and wait. And then, you have like a 9, 10, 8, 9, 10 day move that can do all of that work all of a sudden. So the markets really do move in these waves. You can have just a market that just goes sideways, sideways, sideways. Nothing happens for weeks, basically. And but meanwhile, you're getting data over here telling you that the banks, even though the market's done nothing, the banks are still buying this right now. And so that's all we're prepping for is we're just like, hey, I think a move like this is coming at some point. But, since this like circle over here, that's where they started to buy, and they've been buying ever since. And you can actually see another cool thing too is I don't know if you guys knew this for those that are new, but we have another scanner. We don't use this one hardly at all um, because it doesn't really tell you which way to go. But it's for those of you that are kind of, COT data geeks over there. If you're a COT data nerd, this scanner is really nice because this little scanner right here on the website will basically tell you what the shift has been over the last 1 to 10 weeks. Okay. So, for example, if you wanted to find out what the biggest shifts were this week, so the USD CAD was the biggest recipient. The banks bought 15% more USD CAD positions this week. Last week, over the course of 2 weeks, they've increased by 22%. And over the course of 3 weeks, they've increased by 24%. So they've been on a 3 week long buying spree on the USD CAD. It looks like about half of their buying, or a little more than half of their buying, came just this last week, though. And that's okay because they have been buying for a lot, like over the course of 3 weeks. And it's okay that just, I don't really like to trust just the 1 week shift. I don't even like to trust the 2 week shift. But once the 3 week shift kind of kicks into gear, that's what matters to me. And if you filter this over the 3 week shift, these are your top ones like pound CAD, USD CAD, Euro CAD. Those are all really close together. They're almost tied for first place. So this is kind of nice. You can actually go back and see where they put in most of their buy positions over the course of 1, 2, 3, 4, 5, and 10 weeks. You can even look at the 10 week shift if you want. Like here's the New Zealand dollar. It's had the biggest 10 week shift, of 67.13%. You've got Aussie Kiwi that's had a 77.87% negative shift over 10 weeks. So it's fun. I don't use that 10 week one at all, really, but it is interesting if you're curious to see what the banks have really pushed over that period of time. Because a lot of times with the 10 week shift, the market's already gone in the direction of what the banks were hoping to do. So I don't really use that, but it is interesting to at least look at. Like I said, the 3 week is like if that to me that's the big one. On my experience, I'm just hooked on the 3 week shift. Um, um, yeah, so that's the one that I care about the most. Anthony says those shift percentages are week to week. So yes and no. Let me explain it better. So they're cumulative shifts. So so maybe that answers the question just by me saying that. So for example, when I look at the positive shifts over the last 3 weeks, number one is pound CAD. That's not how much they bought 3 weeks ago. That's the cumulative shift across 3 weeks. So if you take the shift of last week plus the shift of 2 weeks plus the shift of 3 weeks, this is the cumulative change in position as a percentage over 3 weeks. Okay, you got it. Okay, perfect. Yeah, that's what that represents right there. So, yeah, very important that we get that too when you're looking at this data. Okay, cool. And you'll notice it's the same data that's right here. Like when you look at the, let's see, like EuroCAD, it's up 24.18. It's the same number right there. They're the exact same because that's, yeah, exactly. Okay, cool. So let me show you what I want to do. I want to spend like 5 or 10 minutes, then we'll wrap up. I want to show you guys how you can actually get into trades using this divergence scanner. And I'm open to more ideas. If you guys have other ideas on how to do this, that's great. Let me show you how I do this. Let me show you a trade I took recently. This is on the there's this one, but the one big one that I took was this CAD franc. So this was one of my favorite signals off of the divergence scanner. So this is a pretty big account that I have that I'm trading. But basically, I've used a modified martingale with this, where basically I scale into the position. What I've done is I've spaced my positions every 10 pips apart. And I've basically put, I think it's like 5 trades at one contract. and then I've got 4 or 5 trades at 2 contracts, and then I've got 4 or 5 trades at 3 contracts. And I think this goes back to ADR, basically to ADR, because I don't see that this currency pair going beyond the two average daily ranges without the banks intervening to get this market to go in the direction they want to go. So this has obviously been one of the top signals off of the divergent scanner right now. What I do with this is I scale in on the way up every 10 pips, and then on the way down, I've been scaling in every 10 pips. This is a more aggressive strategy. You can make a lot of money do this. You can also lose a lot of money doing this. So this is not something that I really teach in the live trading calls because it is very aggressive trading. But I've put a lot of confidence in this divergent scanner over the course of the last couple of weeks. And so, or not no, couple of weeks, no, months. Like over the last several months, I've put a lot of confidence in this divergent scanner as we've seen just trade after trade just work out like clockwork with this scanner. And so I've just put in more like, yeah, I mean, obviously if something's working, you're going to put more money in it, right? And so that's kind of what's happened to me is I've just seen the level of success that I've had with it. So I've put a lot more money into it. So, um, let's see. So that's basically what I've been doing. Like on a pair like this, is I'll just scatter them every 10 pips is what I've been doing. If it's a currency pair with a pretty big ADR, like let's say the CAD yen, which is another example, a trade we have open right now, or a signal that we have open. That one I might spread out every 20 to 25 pips instead, just because the average daily range is so much bigger. So I haven't really put together a perfect plug and play system to this yet. A little bit has been and so just I'm a little raw with this here, but a lot of this has been just kind of a fill for the market, and then that's what I've been putting in. As far as stop losses go, I've put a max stop loss out on these trades of 2 ADR as well. So I've got 2 ADR that I'm willing to scale in, and a 2 ADR stop loss as well on these trades. So I've been really loose with that. Honestly, we probably don't need a stop loss that big, but that's what I've done so far. Um, okay. And then as far as take profits go, I actually am not using a take profit so far on these divergent signals. And the reason why is because I just wait for them to downgrade. Like it'll happen naturally. These signals on the divergent scanner, like for example, with the CAD Frank, that's the trade I was just in or just showing you right now. It's at a negative 18 ranking. That if this goes down another, like if the CAD Frank goes down to like this level down here, this old support level, by the time it gets there, the divergent scanner will no longer have a signal for me. Why is that? Well, because the scanner is smart enough to recognize that price change as the market starts to collapse. As the market collapses, the signal will diminish its value, and you'll see this number it'll go from very negative like it is to less negative. It'll even get itself back to efficiency, which would be somewhere between 0 and maybe 9 or 10. And that would be a neutral signal at that point. If you ever see these get to neutral, like if you see like the CAD Frank go to neutral, then you should not be taking trades. And if you still have trades open, you should take those profits and be done. Okay. So the scanner will keep you in alignment that way. That's why I haven't really used the take profit, because these trades are supposed to work and they do work. And once the market gets where it needs to be, it's efficiency at that point, and you should close. I like to try to initiate these positions at the beginning of weeks, at the beginning of the week. And the reason why is because that's when you have the newest and freshest COT report data. If you let this go all week long, the data is still recent and still good data to use. But we're going to get a newer report coming out soon. Speaking on that, real quick, while I've got you guys here, since we had Memorial Day, I think that's going to affect the release schedule. Let's check the release schedule real quick. And when do we get the next report? So we just got um, the 23rd is when I got my last report. Okay, so I'm still going to get up report tomorrow. Okay, that's good. So they're going to release tomorrow after they usually release it at like 4 p.m. Eastern on Friday. So, okay, so the COT report and the scanner should not be affected. The next time we're going to get affected is the 23rd of June due to Juneteenth, I imagine. Yeah, okay, so we're not going to get the report until Monday, the 23rd on June. So that's the next time this will be affected, but it looks like we're good to go for the next little while. Awesome. Let's see. Oh yeah, you say CAD yen is melting right now. Yeah. So let's actually go take a look at that one. I think I have a trade on that one. Let me check. I'm not sure. No, I don't. Yeah. Oh yeah. Look at this, and it's just getting started too. So it's funny because now I view the market differently. Hear me out on this, guys. Seriously, listen to this. So when I see movements like this has been going up. Look at the CAD yen. It's been going up since Monday. Yeah, like over the weekend. Like this was went up to here. A retail trader might look at this and be like, "What? That's terrible. The market's going against me. I was supposed to sell and that was supposed to work out." But if you focus on this scanner as a, like I said, this is a 1 to 3 week long excursion, escapade, rampage, whatever you want to call it. Yeah, I don't know if you want to call it something different. Maybe we'll find something to call it. But these banks, they go on these raids, and and they take a couple of weeks. Um, it takes a couple of weeks for these to play out. So just because the market maybe went against you for a few days, that doesn't mean it's going to collapse the other way. Look at this one; it's actually collapsing now, um, like Muhammad said. And I anticipate this to continue to drop, especially considering that when you look at the divergence scanner, it's at a negative 19. So yeah, this one is due for a significant sell off over the next, couple of weeks here. So where the market is now, in a couple of weeks, you might see this market, down in this area. Maybe you'll see it down in this area down here based off of what the banks are doing. Look how fast that market came up and look how even faster it came down. That's a telltale sign, right? My guess is they tried to get people to buy into this thinking that it was a new uptrend. Meanwhile, the banks were probably just selling everything they could on the way down, right? Yeah, trading campaign. Yeah, that's a great name for it. That's basically what they're going on is these campaigns. And you'll notice as well, by the way, when you look at this, a lot of these are very related currency pairs. So this is another really important thing. Like you got CAD yen, CAD franc, pound CAD, Euro CAD, USD CAD. What's the big relationship there? They're all related to the Canadian dollar. So obviously the banks have this goal to sell the Canadian dollar right now. That's their big push. And so when you take these trades, you're not really diversified if you take like say all four of them or all five of these signals. I personally would suggest that you find one that you like the most and kind of go with that. When we started the week, the CAD Frank was my big one. I think it was one of the top ranked. I think it was the top ranked pair, and so that's why I put so many trades on this to start the week. Was because it was one of the top signals, and then the other reason why I like this, if you guys recall, is you can see back over here. This was forming in this consolidation, just a big old head and shoulders pattern, right? So you had this head and shoulders that was forming just as this market was accumulating short positions by the banks. And so we knew this move to the downside was inevitable, which is literally happening right now. And it continues to go even lower. So this is I think I've probably made more money personally with this divergent scanner over the last 2 months than I've made this entire year with like overnight strategies and weekly trades from scanners. And so I'm excited to push this even more because I think this is the most powerful tool that we've made. And I didn't even realize it at the time. I just had this idea back in August of last year, and it may have been the best trading idea I've ever had. I just figured what would happen if you were to trade the currency pairs that the banks are trading, but what if you could do it at a better price than even the banks thought have? And to me, it was just like wishful thinking. But then as I thought about it more, I was like, I think I could actually do this. I think we could actually figure this out. And sure enough, I got to be careful too because I've posted this on YouTube a couple of times, and I've even had some hedge funds reach out to me in the last couple of weeks who have asked information about this particular scanner because I think it's absolute gold. It's a golden opportunity. So I'm really excited about it. Um, yeah, no, I had some guy. I posted a Divergence video on YouTube a couple of weeks ago, and I got this random call from a guy, and he's like, "Yeah, I work for this like hedge fund. I forgot the name. It's like in Chicago." And he's like, "Yeah, we use COT data all the time, and I saw your video and your Divergence scanner, and I thought I'd give you a call." So I was like, "That's awesome." So it's really, really, really cool stuff. And then this was a little while back, but there was another company in New York that asked if they could white label our scanner and use it on their website, which I so far I've declined. I haven't accepted that. I think it's just fun what we're doing. Um, I think it's fun that our little group put together something so cool. So so that's kind of how I've been trading it right now. I use my modified martingale, so I basically scale in on the way up and then specifically try to scale in on the way down. I try to scale in on the way down more than I scale in on the way up. I'm a little bit more conservative on the way up because if I'm shorting something, let's say I'm shorting something on the way up and it goes against me, you can lose money very quickly. So I would rather, like, if the CAD franc goes against us, I'd rather scale in on the way down because there's less drawdown opportunity, which is good. You don't want to hit too many big drawdowns on the way down. So anyway, really fun. Any questions about the divergence scanner, the COT data in general? Um, yeah, hopefully it's pretty explanatory. You just come in here every day and you want to filter this by the biggest shifts. So right now that would be CAD yen is the biggest one. You don't necessarily have to go with the CAD yen. You just go with the one that you feel most comfortable with. I'll often talk about these in the webinars, so you guys don't necessarily need to do it yourself. You can come to the webinars and I'll just tell you the ones I'm focused on. Like CAD Frank was the one that I focused on at the beginning of the week. It's starting to work out really, really well. So that's the big one. Right now, you might have other ones like the CAD yen, which is now technically the biggest ranked one. NAS 100, I think, is actually beginning to see potentially. I think you might see NAS 100 pull back again tonight, just like it did last week. I wouldn't be surprised if it does. Let's see. Lauren says, Steve, when you become one of the big guys, don't forget us. That's nice of you to say. That's really nice. No, I don't. I won't forget you guys. You guys are coming with me. How about that? Let's do that. That's awesome. Mom says, wouldn't be surprised if one of them sneaks in the program and takes our signals. Yeah, they may have already. Like we have people that sign up for the program almost every day. So I don't know. And sometimes I don't know who they are. So, never know. Cool stuff, guys. Well, this is fun. I think right now I'm just kind of holding these trades right now, the ones that we posted at the beginning of the week. I think I may get in the routine just to kind of involve this scanner more in the group. I think I may just start posting a screenshot at the beginning of the week with the top signals from the divergent scanner, and you guys can hop into them as you see them come through. So. All right, guys, I think that's about it. Appreciate each one of you. Have a fantastic rest of your evening. Enjoy your evening, and we will see you guys in the next webinar. Thanks for coming.